hassle-free loan, or a plan for long-term success? Welcome to the Industry Leader Update, brought to you by Reverse Focus. Last week, the Washington Post published an article entitled, "Window is Rapidly Closing to Get a Hassle-Free Reverse Mortgage." It is a well-written piece, and it outlines the change the financial assessment brings, but more importantly, reveals the HECM program's history, which led to such a monumental overhaul of the program. Interested in a reverse mortgage without a lot of hassles? Better get your application in fast. As of April 27, the federal government is imposing a series of extensive financial assessment tests that will make applying for a reverse mortgage much tougher, much like applying for a standard home mortgage. Now, indeed, the home equity conversion mortgage has moved from being based merely on age and equity to a fully underwritten loan, all in the effort to reduce risk for both lenders and FHA. For a quarter century, the HECM program tweaked lending limits, lending ratios, and origination fees, but left the gate open with simple qualification guidelines. That was until the housing crash. The economic model upon which the program was built was never intended or prepared for such a catastrophic event. During the years of the recession and mortgage bust, thousands of borrowers fell into default because they didn't pay their required property taxes and hazard insurance premiums. On top of that, real estate values plunged, producing huge losses on defaulted and foreclosed properties for the FHA. Now, he also added that this wave of defaults led to a $1.7 billion bailout in 2013. When it comes to homeowners obtaining a traditional mortgage, the word hassle is often mentioned afterwards. Not surprising, since the consumer must work with their lender to locate and produce documentation for income, tax returns, and more. Now, while the HECM may have had the advantage of once being a hassle-free loan, it did come at a great cost, with thousands of technical defaults and many borrowers who financially imploded in the years after getting their reverse mortgage. Now, after effects, they were felt by borrowers, lenders, and FHA's insurance fund. Last Wednesday, Reverse Mortgage Daily hosted a national webinar which addressed the financial assessment and formulating a sales strategy. Now, webinar panelists included some of our industry's top leaders who did provide very valuable insight, such as explaining the why of the financial assessment to the prospective borrower, the positive impact on the loan's reputation, and increased opportunity to reach more non-needs-based borrowers. Now, one panelist contrasted the use of the HECM as a Band-Aid loan versus a viable long-term solution for success. No one wins when borrowers face foreclosure after getting a reverse mortgage, or when FHA has to explain to Congress why they need yet another financial bailout. Now, despite its perceived hassle, the assessment moves us toward a more reputable product, expanded market potential, and less reputational risk in the long term. Now, what is your sales strategy with the financial assessment, which goes into effect next Monday? Leave your comments in the comment section below, and have a great week.